Hi, Kevin Tudor here, going through a sample profit and loss for this is a real estate company, and this is actually a real company that works within QuickBooks Online, or QBO for short, and just changed their name. This is a one-person company that runs their accounting through QuickBooks Online, and we've asked them to use their P&L for some example purposes, but change the name. So just to get a good inside look at what a P&L is, and I really just want to go through the things that we look for, the things that you should be looking for, and kind of using a profit and loss for, and what the benefits and are of having a profit and loss, and why it's really important to do. The first thing is it gives you a snapshot of your business over a certain amount of time. And in QuickBooks, QuickBooks Desktop or QuickBooks Online, you can, or really any accounting program you use, you can change it according to a time period. A profit and loss is always looking over a certain time period, whether that's last quarter, the current quarter, this year, last year. You always are looking at a certain time period. And in the example we have up on the screen here, it's for all of 2020, January through December 2020. So we're just looking at a one full year worth of a P&L. And in this case, filming this in November, it's actually only 11 months worth, but we're looking at the snapshot of 1 year. And you can also usually, when you're looking at a profit and loss, pull up a comparison to look at like the previous year or the previous time period where you're looking at, just to get an idea of how things are flowing compared to another time compared to the same time frame in a previous year or a previous period. So a lot of times we'll look at that and check here previous year and look at dollar change or percentage change, and that helps us see where a company, how they're performing, and how they're doing against either their baseline or as a percentage of what that previous year was. So a lot of times we like to do that, but for this purpose, I just want to show this 1 year, a snapshot, what's going on, what we really use a P&L for. So let's just kind of go through the basics of it without getting too into the details, because really when we analyze a profit and loss, and what I want to be able to get through to you is it's not complicated. It's very simple. We want to have this data to be able to see what's going on with the company, and we want to be able to have this for our analysis to see where things can improve, maybe where you're falling short in areas, where you're spending too much, what things can change so that you can optimize things, and really the goal is get the most amount of money you can to the bottom line, which is that net income line. So let's talk about that and just kind of go through. We won't go through every line, but just some of the details. At the top of a P&L, of course, is your income. You're in for a realtor company, that's usually almost entirely commission income from your commission of selling houses. And in this case, for the year, we have commission income of almost $235,000, and this can be anything for your company. Doesn't matter for these purposes of what the amount is, but in this case, we're looking at $235,000 in income. Maybe you have certain other smaller line items, but areas of income. But for the majority of realtor companies, this will be your big money number at the top line, and that's what this is called on a P&L, is the top line. It's your total income, and then from that we'll deduct expenses that come with having a company and optimizing your company, and then again at the end we have at the bottom the bottom line when we take all income minus expenses, have your net income is the bottom line. So here we have the commission income of $235,000, and then the benefit here with the P&L is to be able to see what are all of these expenses that are essentially servicing this income. What are all of these expenses that I'm using to produce this income at the top line? And at the end, do I have a profitable business, at the bottom line? And in this case, they do. So let's just kind of look at that. When you're running your company, you're going to have different categories of expenses that are used, as I said, to service that income. You're going to have your accounting, your professional expenses, your meals, your auto expenses, let's just kind of go through some of these things. And in this case, they have accounting $3,600. That's probably about $300 a month. That's fairly typical in accounting. Advertising and marketing, a little over $12,000, roughly about $1,000 a month. Is that a fair assessment for this company? In this case, essentially that'd be looking at $1,000 a month to produce their $235,000 in income. It seems like a pretty good return on investment in terms of whatever this company's doing to spend in their advertising, whether that's Zillow or paying a company to do ads or something like that, whatever it is. It seems like a pretty good return on investment. That seems like a fair number in this case to be spending on that. But you can look at that as what's that percentage of income that we're producing? Your numbers will be different than this one. And you can make those assessments over the years when you have a good accounting system to see what, where's the ROI? Should I be spending more on this? If the ROI is good, maybe I should be putting even more money into advertising so that I can produce more income. Or, if this number was $48,000 on advertising and producing $235,000 in income, maybe that's a little too much. Maybe when you see that, when you look at the P&L, you need to pull back a little in advertising. So those are the ways we kind of analyze that P&L. And again, in this case, that seems pretty fair. Auto expense, these would be, your expenses for your car. Maybe you're spending a lot on in repairs or gas, or maybe you bought a new car this year and you're putting that in there. You want to be able to keep track of that, and then at the end of the year, you also want to be able to keep track of your mileage with an auto expense and determine with your accountant what the best deduction for that is. We won't get into the rules there, but it can there's some trade-offs as to your total auto expense versus taking a deduction of just simply your mileage. And either way, though, you want to be able to track what it is you're spending in auto, and are you spending too much, or is this a fair number? Your bank charges, your transaction fees, processing fees, monthly bank fees, things like that. That should be relatively low. Hopefully, in this case, it is. Business meals, this can range. You don't want this to be too high. Of course, you need business meals you want to take out your clients. You want to speak with them, develop better relationships with them. You get to deduct that. It's a legitimate business expense, but you want to keep that, reasonable. In this case, $4,000 on a little over $4,000 on a $235,000 income. That is a reasonable number. And again, compare that to over the years. How are you doing? Or even compare it to colleagues as a percentage of income. Continuing education, things like different trainings and things like that. You're always going to have that. You're going to have your gifts for clients. This is a very reasonable number for a realtor, especially producing that amount of income. Insurance, insurance things like that. Legal and professional, maybe certain years, maybe you'll have some attorney's fees, some consultation on getting employees, how to treat them versus contractors, things like that. Fairly typical. She'll have that higher in some years, not as high in others, maybe even zero in some years. Licenses and other fees that you have to pay, MLS fees, things like that. Again, it's all about how reasonable are these numbers. If you're seeing $15,000 in licenses and fees, you want to dig into that and say, why is that happening? And you may not be able to really see that in the normal course of business until you get in and look at this P&L. So it's really important to be able to do those things. We'll just kind of skip down. Let's look at a number that pops out, like 12,000 rent and lease. Okay, that number pops out. It's higher than a lot of these other numbers on the P&L. Maybe you're renting an office for, it looks like maybe $1,000 a month. Is that reasonable? It's a lot of money, $12,000. You're producing a decent amount of commission income, in this case, $235,000. Do you need that office? Do you need to rent that space for the money that you're producing? If so, perfectly legitimate and reasonable expense. But if you're looking at this and going, you know what, that $12,000, if I took that away, that could be added straight to the bottom line, added straight to, more $12,000 more money to me. And you don't really think about those things until you're really looking at it on the P&L. So that's really what we're getting at with this. Referral fees pop out. Again, pretty reasonable for this industry, for this company, for that income. Nothing that pops out there. Travel maybe a little high. That can sometimes in other years that'll be even higher, sometimes lower. Is that travel that's used to try to obtain a client, something like that. Perfectly reasonable. But again, it's all about being able to really get a good grasp on what's going on within your business, because otherwise you can be spending money, these make these payments, they feel small when you're making them, but then sometimes they feel bigger. But when you add them all up at the end of the quarter or the end of 6 months or the end of the year, where is all of that money going? What categories is it going to? Where am I spending my money to produce this top line income? You just can't tell unless you're really analyzing this profit and loss report for your company, unless you're keeping it updated on at least a monthly basis, keeping things updated so that where's my money going, what am I using my funds toward in order to produce my income. Am I making good investments in my expenses? Are the expenses that I'm using paying off? Are they generating income at a higher and higher rate as time goes on? You can look at these things on a monthly comparison, on a quarterly comparison, a yearly comparison. Am I spending my money wisely in order to produce more and more income, get a higher and higher return on investment? And you just can't answer that question for your company unless you're utilizing a profit and loss statement with a good accounting system such as QuickBooks or Xero, or QuickBooks is the industry leader. It's one of my favorite for doing this. You can do it all online with QuickBooks Online, but it's really important to be able to keep it simple. It doesn't have to be complicated. Just keep track of things and be able to tell where your business is going, where's your money going, and what kind of return am I getting on my investment. At the end of the day, that's what you really want to ask yourself, and continue to get better and better. And this profit and loss report, this analysis every once in a while helps you to really get a good grasp on your business. So utilize it, learn it, and keep it simple. And I think it'll really help you in your business.